Today's video is, what is your strategy? What's your strategy? It is important that now we know our why, we work out what our strategy is, and this is based on quite a few factors. So number one, type for your goals. So as we discussed in a previous video, what's your why, what's your goals, what you're trying to achieve out of property investment, or anything for that matter, but certainly in this case property. What are your goals? Are you trying to do it alongside work? Are you trying to do it alongside business? Are you trying to create long-term wealth and legacy? Are you trying to create immediate cash flow to get out of a problem that you are in? That is dangerous, so don't use that as a, don't chase your tail, if that makes sense. But if you're wanting cash flow to maybe get out of a job and create something different, what sort of type of property are you going to look in? So if you're looking for a bit more cash flow and a bit more hard work, a bit more headache, HMOs might be the one for you, or even serviced accommodation. If you're looking for more longer term capital growth and appreciation, but a little bit simpler, you might look at buy-to-lets. If you're looking at a slightly different strategy in commercial and having something that is a little bit more secure depending on the tenant type, so you might get fully repair and insure lease, and if you get a really good tenant on that, that is really good for security over a long period of time where you don't have to do loads to it. A little bit more complex, but that is a type that you can look at. Risk. What is your appetite for risk? So are you looking to massively leverage yourself, really diversify, really invest heavily and early on, because you have that appetite for risk, or are you a lot more risk averse and you really want to make it steady? That really will depend on your strategy in terms of what your risk appetite is. So if you're really risk averse, really sort of worried and scared, just start with a simple buy-to-let where you can't go too wrong. If you've got a little bit more risk, you might want to do a bigger refurb where you might be able to add more value. That might be a commercial with a HMO above it, or commercial with flats above it, but that becomes with a lot more risk, a lot more build costs, a lot more problems. The riskiest of them all, potentially, in my opinion, is new builds. Are you sort of able to tolerate that sort of risk? Maybe there's more reward. There's also a lot more risk involved in that. So what is your appetite for risk? Budget. This is a real key one, and obviously the budget things should potentially be one, but it's something that can really change and adapt. Firstly, that depends on what is in your bank account to start with, potentially. What are your savings? What equity do you have in your house? What do you have access to day one? What do you have access today? That, if you've got 50 grand and you're happy to start on your own without going to raise external capital, it's risky. You might want to go buy a buy-to-let in Barnsley that's, you can afford to buy. Relatively simple, relatively easy. You don't have to go find investment, you don't have to do a lot of work. It's relatively risk averse, there might not be huge refurbs, so that might tick all of these. But if your goals are to get £3,000 a month cash flow this year, that won't fit into that goal. So all of these things have got to align into what these are. Obviously, budget might be that you've got really wealthy friends, or somebody that's got a lot of money, or you've come into inheritance, so you might be able to go for something a bit riskier if that suits your appetite and your skill. And this goes to the most important one for me. Lots of people on the internet, not just in property, in anything, will say, if you put your mind to it, you can do anything. And to a degree, there's an element of truth in that. My problem is that if you are a builder of 30 years and have built hundreds of houses, extensions, and really know the ins and outs of the building trade, and really good at it, you might be able to go build 4 new houses. If you're an IT consultant that's worked in an office for years and knows cybersecurity really well, your knowledge of property, might be really limited, and it might be really dangerous. You'll obviously have some sort of skill set and you'll be a really intelligent person, but that does not mean that you can go jump and build 4 new build houses, or go buy a commercial conversion because somebody has said anybody can do it. It is really important that you are self-aware and understand what your experience and what your skill set is. If you're an accountant, you might be able to do all the numbers really quickly, but you might not be able to manage a refurb. There's an element of outsourcing in everything you do in property. You can't be good at everything, but you cannot jump in at the deep end if you have no experience in property or building. This is really important for me, and probably one of the most important factors when you're considering anything in property. If you're enjoying this video and you want to learn more, I have these cheat sheets which you are available to download and you to have. So if you sign up to our email list below, I will send it. I'll send it over a series of 30 emails, and we have this pack and bundle which you're able to download and use. If you're really enjoying the video and you want to learn more about property and you want to invest more in property, you could get some mentorship from me, whether that be group mentorship or personal mentorship, one-to-one mentorship. There is a link below where you can sign up for the course. If you're just enjoying the videos and want to continue watching, please like and subscribe, and every time one of these videos come up, you'll be able to follow me, or at least know that it's there. Okay, next part of what is your strategy is goals. So we need to work out what our short, mid and long term are. So it is likely, and this is one thing I'd say first, is property. We always need to focus property as an investment business, not as a cash flow business. So what I mean by that is you're going to invest in property. You're not looking for instant returns or get rich quick. The cash flow will come, and cash flow is helpful, and there are ways of getting quicker cash flow, but no one started property and you get cash flow day one. So it's really important that we understand that, even on the short term goals. However, if it is cash flow, then maybe we look at serviced accommodation or HMO. You've got to be aware that serviced accommodation is a business. It's a hospitality business. It's not a property business. You have to have the property as a host, but it is a hospitality business from there. But if the short term is to get to £3,000 a month, for example, there are quicker ways of doing it than buy-to-lets. However, I think the buy-to-lets are best. I think that everybody should buy sort of 10 or so of buy-to-lets if you can. It teaches you how to raise finance. It teaches you how to buy property. It does it with relatively low risk. But the short term is that. Mid, if it's to grow a bit more wealth and have a few more holidays, you might want a mix of strategies. And this is where we spoke in a different video of how you can diversify your risk within property. So it might be that you start with 3 HMOs as an example, and then you go to a mid strategy where you're looking for a bit more cash flow but more long-term capital growth. You might go back to buying maybe 5 or 6 buy-to-lets. That might be your strategy to recycle that and to look into that. A couple of those you might turn into service accommodation because that works in the area. Bit more cash flow, a bit more work, but certainly something you could do. And then the long-term strategy might be, again, like sort of generational wealth and putting stuff into different types of investment strategies. So long-term, and again, this is getting a little bit complex. You may have opened a SAS or a SIP, which is a private pension that you can, a self-administrated scheme where you can choose where you invest it. You can invest that into commercial property. It's a really good and efficient tax wrapper. So if we start to grow wealth from here, we're out of our job, we can start investing into our SAS pension tax-free, then reinvest that into commercial property, and that creates long-term wealth. Now that isn't simple, it's not easy at all. It takes a lot of complexity, time and hard work, but if that is to grow that long-term wealth, that's fantastic. One thing I'd say is that your long-term goal might just simply be 4 or 5 buy-to-lets, leave them, park them, and you're happy with that. You're enjoying your job and you're happy not having to manage, search and do all the work that is involved in property. So it's really important to understand that just because I've got short, mid, long here and I've used those examples doesn't mean that you have to follow my examples in it. Your short-term goal might be to buy 1 buy-to-let this year, 2 years, and really know the process ins and outs. And then your long-term might be buying 4. Like, don't worry about having these big goals if you don't, or goals that suit other people. For example, say big, like everybody's goals are relative to themselves, but that's important on your strategy to what your goals are and where you want to be. Now, anything to do with your strategy is going to involve a lot of hard work and a lot of challenges along the way, and this is sort of including the previous video about what's your why and then your strategy with that. But here are 4 things that as part of it aren't necessarily completely isn't exactly like what your strategy is, how to keep going throughout the process. Once we've worked out what our strategy is and what our why is, we're going to visualize that, make it really real, make it personal, make it important to you. Every time we have a little win, first offer accepted, first deal done, every time we get a deal done, every time it's completed, every time rent comes in, have a little celebration. And it might be whatever works. Doesn't need to be a holiday to the Bahamas, but it might just be a glass of champagne, it might be a meal out, it might just be something that you really enjoy doing, a walk somewhere, a visit to your favorite place, trip to the cinema, whatever. Celebrate that win and just mark that occasion each time. Support. You are going to need lots of support in this, whether it be your partner, whether it be your brother, your sister, your auntie, your uncle, your best friends. It's going to be hard. They need to support and understand what you are trying to achieve. It's clear. It'd be good to be clear with your closest, nearest and dearest what your why and your strategy is, so they understand why you are doing this, why you're starting this, why you're investing in yourself and into your future. And you've got to continue learning. It is important that you always learn, be it from mentors, from groups, from online courses, from YouTube, seminars, anything. You have got to learn, continually learning, and the market's continually changing. There's lots to learn from it. Try not to get overwhelmed and break it down, but it's important to learn. And that is a video on what is your strategy and how to work it out.